Hi and welcome to the Market Alert for Wednesday the 30th of March 2022. So an interesting day yesterday. Stocks jump, oil dump over Russia-Ukraine peace talks and optimism. That changed later in the day, but typical, the daily ceasefire rhetoric coming to nothing. And Russia reversal report routes oil, gold, bonds and signals recession inevitable. The Fed has never been as behind the curves as they are today. They certainly aren't. I mean, look, if you accept that their inflation figure is 7.5%, they've only increased interest rates by 0.25%. I mean, what chance have they got of combating inflation on that basis? So they're way behind the curve. That's a fact. Buy the rumour, sell the news, sell the rip. This is obviously alluding to the fact that, as you'll see in the 5-minute DAX, the speculation that there is going to be a ceasefire, they ramp the market up only to see the market then move lower and the whole thing fizzle out. Hard landing, virtually inevitable, countdown to recession begins as the 2 and 10-year curve inverts. This has never really failed. We've covered this many years ago when we looked at the last recession before the COVID pandemic, where the 3-month and 10-year actually inverted, and I used to cover this daily. So yeah, it's coming. As it says there, it takes on average 12 to 18 months from the inversion to the recession, or faster this time, because the Fed has never been behind the curve so much. They really are way behind. Sanctions bite, average Russians turn to gold. This is an interesting one as well, because obviously we saw last week that the world leaders were trying to stop Putin from selling his gold. What they've missed was the fact that he can still buy gold, so he's buying gold. And as obviously stated in previous market alerts, he's also saying that if you want to buy gas from Russia, then you can either pay in rubles, Bitcoin or gold. So and he's making it easier for his citizens as well. He's abolished VAT on the price of gold at the moment, and he's pegged it to the euro, to the ruble. Right, we've already seen that one, so let's have a look at what news we've got today. It's the 30th of March. The criminal's out at 9 a.m. Lagarde speaks at 9 a.m. MPC member from the UK 9:10. ADP at 1:15. That's the big one for today. And then we've got final GDP 7%. I mean, blimey, that's optimistic. Crude oil inventories showing a draw of -2, and FOMC George speaks at George speaks at 6 p.m. So there we go. On the gold-silver ratio, whilst we're here, you can see yesterday it moved up sharply, only to come back, and we'll discuss that more when we get to the silver market. Let's have a look at the Dow, where yesterday the market managing to break through that 200 MA that we've spoken about for the last, 4 or 5 market alerts, managing to drive through yesterday, not on any great volume, and now we have some divergence as well because the market's moving higher, but we've seen that the stochastics there are lagging. So watch the 89% retracement area there for some sort of weakness should the market move higher this morning. In the 30-minute charts, we've got prices currently holding at the DP level. We've got some demand as well, albeit a modest amount. Got a bit of divergence as well. We've got the stochastic starting to move to the upside as well. So we need to take out the close and these two areas of resistance here and here before we can move back up to yesterday's high, which was put in on this peace talk news, which again fizzled out and said it was just now. They've changed their mind now and saying that it's just a way for Putin to remobilize. You can't make this stuff up, can you? Unbelievable. So they're using it to their own advantage and how they're going to interpret it. Meanwhile, in the German DAX, also the same thing there. The market driving through and heading to the new 78, 89 that I've drawn in from over here down to here and projected back. So again, we're within a stone's throw of this. Expect the market to move higher this morning. We've got some divergence here as well. So it's going to need to or the stochastics are going to need to show some sort of pickup to take this away, otherwise there's weakness around. But I have to say that the all-time highs for me are on the cards, even if it takes a few weeks here. Can't see because the market's now used to the war situation that we've got, that it's going to be discounted completely and we're going to move back to the all-time highs. I can't see anything else. The long side is the best side. You can try shorting, but the market switched to the buy side now. Obviously it'll have days where we get shorts, where you can see here and here, but they're few and far between amongst the green as we see this market moving to the upside. So any sell-off is generally then picked up and moved back to the upside. In the 30-minute DAX yesterday, you can see that the market continues this move to the upside, and then moving vertically once we had the ceasefire news that I showed you at the outset. The market, again, like the Dow at the moment, back at the DP, 50 EMA, crossed over demand, and we've got divergent support as well in there at the moment. So through the close and back to yesterday's high is where the market wants to go to. A quick look inside of the 5-minute chart for yesterday. The market, we'll just go back a bit further. Not a lot happening in the futures market. Market traded lower, came back, did 89, then retraced, then took off and then couldn't move higher, but had to have a shakeout first. We had the market oversold, came back, just went below the double bottom and then moved up, then back, oversold, crossover, demand, and you can see that we've got the pullback there, oversold. The market then starts to move to the upside. We become oversold. Market pulls back to the 50 EMA and the 20, and then once again starts to break to the upside. Oversold with divergence. Seeing the divergence there as the market's moved higher, and then prices come back to the previous day's high, and there you can see it's oversold, crossover, demand. See that same picture, and then the market just absolutely flies to the upside. And this is all because of, yes, you guessed it, the ceasefire. The news of the ceasefire, the daily news of the ceasefire, the propaganda to bring the markets up before the Dow opens. But it didn't last long because the Dow rallied and then sold off, and so did the DAX. And again, this is what it's saying about the frustration in the markets, which you get, buy the rumour, sell the news. And that's what we saw during yesterday. And overnight, you see the markets currently back above the DP. We became oversold, and we got the crossover there, back to green in the parabolics, and now moving to the upside. We're overbought at the moment, but we're going to try and get to the close. The momentum is certainly with the upside because we've got the 5 driving through the 20, the 50, and also prices continue to close above the 5-bar moving average at this time. Quick look at the currencies. The yen there coming down, having had intervention by the Bank of Japan on Monday. Tuesday trying to hold, showing demand. Still overbought. Market pulling back a bit there. The only pullback area is here, and we're at 38% retracement at the moment for the yen, so watch out for support here. In yesterday's 30-minute chart, we were overbought, but the market had that spike to the upside on the ceasefire, and then followed down with the Dow and the DAX. And overnight, we were overbought, crossover, and the market trading down to the S2, overbought, crossover, and demand, which if I just compress the charts, there's the demand's in the previous bar there. There we go. And then we see the market finding support at the S2 and bouncing here at the moment. We've got to get back above that previous day's low. Watch this area if you trade the yen, because the market could actually move off this back to the downside. Meanwhile, in the pound, also lower as the dollar moved higher yesterday, but we have got demand and we're oversold here at the moment, down at this 78% retracement as well. And in the 30 minute of the pound, again, you've got that big move to the upside at 1 p.m. Market putting in the 89% retracement, 200 MA R1, and then switching to the downside, trading back to the previous day's low. In the morning, we saw the market move higher, pull back to the low as well, crucial area for the low, and then the market moving to the upside there. Just have a look at that low inside of the 5-minute chart in the morning, and there you'll see that we were oversold, crossover demand, and all the volumes before the market then moved higher, and there's your buying back in at the low. So what I love to do is to use the daily chart, as you know, 30-minute, and then go down into the 5-minute, and then find where the real activity is, and this way you can improve the risk reward immensely by doing this, but you're still trading the bigger picture. And then finally, in the metals markets, well, it was an interesting one. I said they would monkey hammer the silver market yesterday, and they certainly did. They brought it all the way down to the 200 MA. I had an order just below this that wasn't picked up. I'm not expecting the market to be brought back so quickly, with Bank of America having to report their over-the-counter positions tomorrow, hoping that they would actually take it down a bit lower. But they didn't, and they brought the market all the way back, and the 30-minute shows this beautifully. We started off yesterday with the market moving lower, as I spoke of in the alert, and then they just absolutely hammered the market down to 24, which tied in with that 200 MA that we've already spoken about in the market alert. That was an area where there was demand and everything else. Like I say, I was hoping we'd just break slightly below this down to the S3, so I could pick up another position, but that wasn't to be the case. But I'll get back into it. It's not over yet. I don't think we'll probably see the market come back. All we need is another round of ceasefire news, well, not news, rumour, and then that'll bring the market back. And you can see it's slightly weakerish now, starting to move down a bit there at the moment. Brent moving up again yesterday after we slammed with gold and silver, but managed to recover, waiting for the numbers today. Stuck in a bit of a range now with gold between 122 and down to the $100 barrel per barrel area there. Gold also slammed yesterday, but nothing like silver. That's why you saw in the gold silver ratio that huge spike. If we just go back to it, there you can see how silver was losing far more in its position than gold, but that's since changed. Went all the way up to 79 and now come back. And then finally in the dollar, you can see that had a big sell-off yesterday afternoon, and at the moment still showing a bit of weakness there as well. That's because the yield curve for the 10-year has actually crossed overnight. Okay, that will do it for this one. Let's see what happens today. Say, watch out for the rumours. The market's full of them at the moment, particularly the Russia-Ukraine one, but then I have mentioned this every day since the war started, that we have this ceasefire rhetoric, propaganda, rumour, whatever you want to call it, which always comes to naught by the following hour. Okay, that's it. As ever, thanks for watching. See you in the next one.